everyone, and welcome to episode 104 of the Rewarding Property Decisions podcast. Well, I looked at last year's spring report today just to refresh my memory and see how accurate I was, and it did feel a bit like Groundhog Day with some of my introductions and commentary. If I go back through them, it was the weather's starting to change. Well, it's certainly been great in Melbourne over the last 2 weeks. It's really starting to come around, which is good. Footy finals are on the horizon, and just like last year, the Bombers are nowhere to be seen. So I'm got my September's nice and free to focus on property. And the market's starting to warm up. Last year was probably more from a supply perspective, which is again the case this year, but there's a few other differences. So that's what I wanted to focus on today, is what are some of the differences and how is the market starting to change, which is generally, I think, from a positive perspective. And we also want to have a look back at what's happened so far this year to generate those thoughts and why we might be thinking that way. So obviously that sort of brings in what our observations have been and then what our expectations are going to be. So that's how I've divided up the spring report today to go through those two. So let's start with the observations and what we've noticed so far this year. Really, it's been quite interesting. Things are starting to improve. We've seen a bit more activity, a bit more positivity around the market, which has been really good. And we were expecting at the start of the year for conditions to start to get a little bit better. That wasn't necessarily going to revert to price growth through the first half of the year, but usually you need to see a bit of positivity, some more competition at auctions, more participants. And once people start to see that, that's when they lead to the next stage of, okay, prices start to move because I've been missing out on certain properties. And that's generally how things have gone. The market's been a bit more competitive. There's been a few more buyers around. There's been a few more numbers at auctions. The clearance rate's starting to get a little bit better, which we'll get to a bit later on. So things are starting to move. The other thing that we were hoping for at the start of the year, which has also come to fruition, has been interest rate cuts. And that certainly came about in February and May. We had 25 points each. I'm recording this on the Monday. The expectation is that there may well be another interest rate cut this week. So we'll wait and see how that's come. But that's definitely been required, particularly in Melbourne. We've needed some form of circuit breaker, and hopefully the interest rate cuts is going to provide us with that. But what are some of the things that have come out of this and what we've really done and looked at, particularly over the start of this year, is break up some of our own data and our own inquiries to try and get a bit of an insight. And what it's shown has been really, really interesting. So we break our inquiries into three categories. So we've got home buyers, we've got investors, and they're both from a buying perspective. And then we've got disposals, which is our vendor advisory, where we assist our clients to sell. Now, we looked at this back to 2022, which was basically the end of the COVID pandemic. And it was really showing some interesting numbers. So over that time, our investor inquiry numbers have steadily trended downwards in terms of a percentage of our overall inquiry. So in 2022, they made up 47%. In 23, they made up 37%. And in 2024, they made up 32%. And that was until this year, where there's been quite a change. So for 2025, we've seen a spike, and our investor numbers have gone up to 53% for this year. And that's come generally at the expense of the disposal side of things. The home buyers have remained fairly consistent over that period of time. But from a vendor advisor and from a disposal side of things, what we've seen is that there's been quite a bit over that period of investors, particularly Victorian investors, who are looking to sell because either properties haven't performed as they would have liked them to, or they've served the purpose and they're needing to get out of the marketplace. But that's been for the last 2 years, and I think it's now starting to find its level. Most of those people that wanted to sell have done so, and now it's starting to find a bit more of a balanced section. And so the market is starting to balance, if anything, perhaps back from a buyer's market into a bit more balanced circumstances, which is what the clearance rate again is telling us. So has this switch in investor minds, where has it come from? What's been driving it? Why has there been this switch? And it has really been just this year where it's really noticeably gone up. Well, again, so what we've done then is analysed out that specific investor inquiry. So where did they sit previously? What were the numbers there? So what we've done there is we've broken the investor inquiry into three different categories. One of them being Victorian investors, another one being interstate investors, and the third one being international investors. And that's brought about some really interesting facts as well. So the international investors, that's been pretty stable that whole time. It's around 4 or 5% over that same period from 2022 till now. But the interesting part has really come about when we compare the Victorian versus the interstate investors. And the Victorian numbers have dropped from back in 2022 from 78% of total investor inquiry down to 39% of total investor inquiry. And from an interstate perspective, it's gone from 17% up to 57% of total investor inquiry, which marks the first time in my career where investor demand in Melbourne has been led by interest from outside of the state, which is a really, really interesting thing. So what's brought that about? Why is this the case? Well, let's start firstly looking at Victorians and why they may perhaps not have been as interested in investing. And they've probably experienced over a period of time an environment whereby property hasn't been great, and the environment around buying and holding property, particularly from an investor's perspective, has been quite negative. And a lot of the talk around it and a lot of the actions around it have been quite negative. And that's things like obviously increasing land tax, which we've spoken a lot about in the podcast, the short-term rental tax or the Airbnb tax, which is being implemented, increasing of minimum rental standards, which has been not a one-off thing. It's been a gradual. There's been 2 or 3 changes, and there's another one coming at the end of the year in terms of lifting minimum standards, which all of these things on their own are things that can be worked through, and in some circumstances, like the minimum rental standards, are positive things. But these are a lot of things that have occurred over a relatively short window that have made things quite difficult. Obviously, interest rate rises as well, and then the fact that there's been minimal capital growth means that people are hesitant to either buy property in Victoria or actually hold on to their properties. And that's led many investors to exit the market rather than buy into it. So then we look at the interstate and why they may actually be coming into the marketplace and looking at Victoria. Now, a lot of interstate, particularly those in capital cities, have experienced really strong capital growth over that sort of COVID period to now, so 2020 to 2025. Adelaide and Perth particularly have been upwards of 70+% in terms of their capital growth numbers over that period of time, which is really strong. And what that does is it leads to significant building of equity in existing properties that you may own there, whether it's a home or whether it's another investment property, which can then be used and redistributed into other investment assets, and property is obviously another one of those. Rents in those capitals have also continued to rise, which has also helped to sustain that. But they've just had a generally far more positive experience around property. There's been a far more positive mindset. And because of that positive experience, they're now feeling a bit more encouraged and supported and wanting to continue that journey. Because of that, they're looking for alternates and other opportunities. Where's going to be the next spot that I can invest my money and perhaps do quite well? And that's really where Melbourne starts to come into play. We've spoken about this on the podcast around this time last year. I put out a podcast suggesting that I thought Melbourne was quite good value at that point in time. And I think what's starting to happen is others are starting to realise this, and they're seeing that there's opportunities to be had there. Some of the things, rather than just the negatives, which we've spoken on, and the concerns that people have had, people are looking at Melbourne also from an opportunistic perspective. And that's things like the fact that it is still very much seen on a global scale as a very strong international city. It's highly sought after. It's got really strong economic environment. The education facilities here are second to none. We've got fantastic public and private schools. We've got really good universities as well. And the lifestyle opportunities, I think last time I checked it, Forbes magazine had voted Melbourne still the 4th most livable city in the world. So that is still a lot of positivity there. The population growth is continuing to be forecast to grow and grow and grow. So that's going to put more pressure on prices. And one of the main things, which we have spoken about before too, is that the median dwelling prices for Melbourne at the moment are not sitting where they traditionally would sit on a national scale. And people are looking at that and saying, well, most of the time Melbourne sits above Perth, Adelaide. Brisbane, I think, is getting to a point where it's holding its own and will continue to be up there. But Melbourne's not sitting where it should be. Even sitting below Sydney, the gap there is considerable, whereas for a while there it was actually closing. So I think there's a lot of things there where people are looking at it and saying there's opportunities to be had, and we need to get in now before we miss out. So what are the expectations off the back of this in terms of what we've observed and now what is likely to happen for the balance of this year and into next year? And the spring is always a really good time to look at that. In the past, when we've seen conditions like we're seeing at the moment, so that's things like constantly increasing rental returns, reducing interest rates, the suppressed values over an extended period of time, which we've seen in Melbourne for a long time now, and obviously yields therefore increasing, the market usually moves. And when it does, in these circumstances, it can move quite strongly. So the supply through the winter is a really important thing to look at. It's actually been reasonably good. It hasn't been over the top. It hasn't been strong. But for a winter period, it's actually been okay. And the demand, as we've said, is continuing to build. There's more and more inquiry. There's more competition. And what the testing factor will be, that supply will really start to ramp up basically from now onwards going into the spring market. There's always a significant increase in the back end of September, noticeably through October and into November, and then depending upon how the market performs, whether it will run right through December up to Christmas. But that increase in supply will really test that level of demand and whether or not it's there. At the moment, the clearance rate has been growing. It was around the mid to high 60s through autumn. It's built up to into the early 70s now. If it can sustain that, or even sustain, say, a high 60s through the majority of the spring market, my view is that that's going to lead to a pretty strong opening into the 2026, and I think that's when we could start to see some pretty strong growth patterns into the new year. Particularly if we see further interest rate cuts, which, as I said, I'm expecting another one, or the economists are this week, and there's more than likely going to be another one, maybe even two, for the balance of the year. Signs are that these are positive conditions that are likely to see Melbourne drive, and what we're seeing at the moment is, because of there's starting to be that strong interest, it is really being driven by the interstate investors. That's where this strength is coming from. And it's giving confidence, and hopefully what it will do is start to give confidence to local buyers domestically from around Victoria and Melbourne, and they'll then want to rejoin the party and start to come back in from a positive point of view. And that's when hopefully the market will start to turn and we'll start to see some more positivity. But the question will really be, how does the spring market perform? Is that increase in supply going to be sustained, or is the demand going to match the supply that's come through? And only time will tell. So we'll have to have a look at that and keep a close eye on things and keep tuned into the podcast, and you'll see. That's about it for episode 104. Thank you very much for joining me. If you're interested, we are now producing the podcast through YouTube, so you can watch as well as listen, depending upon what you prefer. So please come and subscribe to the YouTube channel. We'd love you to get involved there as well. Otherwise, please pushing out, subscribe on the podcast channels. Push out the podcast or the YouTube channel to any friends or family who may have interest in property and think that this might be valuable for them. Otherwise, if you'd like further information, visit our website, wakelin.com.au. Otherwise, we wish you all the best with your property decision.